Okay. So you see one big slide in the middle of the screen.
Yes.
Okay, perfect. Thank you. Okay. So sorry about that. I don't want to keep too much of your time. So Roger wants me to talk about our FHA 100% CLTV combo program. Um, a little bit about me. I have over 30 years experience in the mortgage industry. First 12 years as a retail loan officer for a major bank. Last 18 plus years, I've been a wholesale account executive. I've experience in all types of mortgage programs, conventional, government, renovation, reverse, non-QM, et cetera. So this 100% combo loan is designed to increase homeownership opportunities for low to moderate income individuals or families by offering 100% financing in the form of an FHA first lien at 96.5% and a second up to 3.5% that'll cover down payment and or closing costs. So basically what you're doing is we are offering them an affordable second that acts as their down payment. So traditionally FHA, you could put as little as 3.5% down. This allows you to put the 3.5% down on the first, but we're actually lending you the 3.5%, so it's none of your own money. You're borrowing 100% in total. Restrictions: there are no first-time home buyer restrictions, and there's no income caps on this. I know there's a lot of grants out there where it has to be a certain geographic area. They have to be a first-time home buyer. They can't make more than a certain amount of income. This doesn't have any of those restrictions, so it's good for most borrowers. The guideline highlights, it mostly follows standard FHA guidelines. The only overlays we have, it's got to be a minimum 600 credit score, where like regular FHA, we go down to 550, but this one's a 600. We do allow manually underwriting on these if you don't get AUS approval on it. And then it's per HUD guidelines, except we cap the DTI at 45 on a manual underwrite, and you need a 660 credit score for a manual. If it's not a manual, you have an AUS accept, it's 600, and then DTI is per whatever AUS will approve. I've had recently them approved in the mid 50s for the back end for the DTI. These are for primary residents only. They are purchase loans only, and the limits, you can't use it for high balance. It's whatever standard FHA limit is for the area where the property is. And I just put down, like most of New Jersey, one unit would be 766,550, and a 2 unit would be 981,500. So you can go to pretty decent loan amounts on these with the limits. How does it work? So we provide a second mortgage, like I said, up to 3.5% to cover the down payment. It really acts as your down payment. And it's sponsored by the National Home Buyers Fund, NHF, which is considered an affordable housing second. So that's how it's allowed to act as your own money, because it's similar to a grant, but it's really a loan. How does it work? You had a question?
Nope, you're good.
Okay, so the first mortgage would be your traditional 30-year, whatever term you pick on the first mortgage. And then the second mortgage is going to be a 10-year amortization with a monthly payment at a note rate of 2% higher than the first. So let's say you give them 7.5% on the first. The second's going to be, it'll be a regular 7.5% 30-year fixed. And the second will be 9.5%, 2% above the 7.5% over 10 years for whatever that 3.5% is that you're using the second for the down payment. Proceeds you can use for down payment and or closing costs. Can't get any cash back for the borrower, and then you can't have any other additional subordinate financing. So pretty much what everybody does is, they just, the first is structured as if they're putting 3.5% down. The second is their 3.5% down. That counts as their own money, even though they're borrowing it, and they close simultaneously. So how does a loan file work? It's a separate first and a second lien. So you register two files. The second lien, you need an actual application for the second for the 3.5%. And we disclose it with the LE, the CD, and all that stuff. And they do have to have homebuyer education for this, whether they're a first-time homebuyer or not. They do require a homebuyer education. I'll get into that in a second. You don't need a separate appraisal for the second. You don't need a title policy for the second. The second is very streamlined. So basically an application, and we disclose it, and we'll close them concurrently. So we pretty much, after you register and disclose it, we do everything for you on the second. You really just work on the first. Fees, the first mortgage will have whatever standard fees you have on any other normal FHA mortgage. The second, there's no originator fees on that. And the only thing it'll cost them is the settlement charges. So if the settlement agent is charging, for the closing for that, a small fee, or if there's any recording fees for the small second, most of these I've done, the second has been anywhere from $10,000 to $50,000. So they're not large loans. So again, recording fees and settlement charges on that is all you have on the second. Everything else on the first will be the same as always. Eligible borrowers on this: U.S. citizens, permanent resident aliens, non-permanent resident aliens. You can do DACA, and you can have non-occupant co-borrowers. So it's pretty flexible on those. Home buyer education that I touched on a second ago, it is required, and you can use various agencies. And are my slides moving? I just want to make sure. Are my slides moving when I'm speaking?
Yes.
Okay, good, because I did a presentation last week and somebody told me after it was over that my slides didn't move. So, so you can use any of these education courses. HUD has on their website a bunch. Fannie Mae has one. Freddie Mac has one. There's a framework one, and I could send links if you need it, or you could Google any of these, and there's courses. At the high end, it's $75 for a course. Some of them are free. But usually it's online and it takes about 45 minutes, and the home buyers do it. It's just a really easy thing to have to do to get this. Gift funds and seller concessions, they are allowed per standard HUD guidelines. You can get a seller concession up to 6% of the purchase price. And so the way I've structured these is if a borrower gets a gift or a seller concession for closing costs, they really may not have to come in with any of their own funds. Right, so you're doing the second for the 3.5% down payment, so you're not coming in with any down payment, and you get a seller concession and or a gift for your closing costs. The only thing that you may need is reserves, and generally you don't need reserves, but sometimes if you get a refer instead of an accept through AUS, it'll strengthen the file if you have 1 or 2 or 3 months reserves. So that's the only case where you would need funds if you get a gift or a seller concession. But most of the time, you can really come in with no money if you can get a gift or a seller concession for the closing costs. Eligible properties: single families, PUDs, FHA approved condos, and then single unit approved condos. So we can get the condo HUD approved if it's not, as long as it meets HUD's criteria. It's a process, but we will help you get that done as well. And then we do allow manufacturer housing if it's double wide, not single wide, and then 2 units are allowed. They don't allow 3 to 4s, and they don't allow co-ops or mixed use properties on these. Final thoughts on this is it allows the borrower to get into a home with little or no money of their own. And then people say, well, what about the rate? The rate is slightly higher than a regular FHA, but it's really a means to an end. We rolled this out a few months ago. I've been closing about a half a dozen or so of these every single month, because it's more of, they may have the credit that qualifies, they have the income that qualifies, they just don't have the money saved. So it's kind of a means to an end to be able to get into that property. And then down the road, there's no prepayment penalty. They can pay off the second if they want. They can refinance or streamline the first. So it's really just to get in there, and then later on they can always refinance or whatever they want to do. What questions do you guys have for me?
That was very informative, I will say. So my questions would only be like, okay, so like you said, they have to take the class online, right?
Correct. Yep.
Right. So that's just a requirement. They have to take one of the classes.
Yep. So after they're approved, the underwriter will tell you take one of these classes. They just go online and they do it. They print out a certificate and they send it over to the loan officer who will send it to us.
Okay.
It's the same thing as like if you have a home ready loan or a home possible loan.
Okay.
A lot of times they have to take a home buyer class. It's the same exact course.
Okay. And how about like pre-approvals?
So we can do a TBD approval. So if they don't have a property yet, you can submit like really a full file income assets credit subject to a contract and title and insurance. And then we'll approve it for you and give you conditions, and this way you know you're approved, and you can even work on conditions before you get the contract.
Okay.
And is there any income limit?
It was very low. I'm sorry. You said income?
He says, there any income limits?
Nope. So no income restrictions on this. You can technically, make $1 million a year and then qualify for this program. There's no income limit. You don't have to be a first-time home buyer. So it's really for anybody who needs this if they don't have the funds to get into it. So I
Interesting.
know a lot of those grant programs, they do have income restrictions because they're really geared to low to moderate income. And the idea of this is the same thing, but technically we don't restrict the income on them.
The 2% that you mentioned on the second mortgage, the lien, that stays throughout the entire 10 years, or is that a variable over the course of 10 years?
So it is a fixed rate for 10 years, and then you could pay it off anytime you want. There's no penalty. But technically, if you kept it, yeah, it would be a fully amortizing 10-year loan. And then after 10 years, you'd be paid off. But it is a fixed rate. It's going to be 2% above whatever you give them on the first. So I did one yesterday. It was like 7.5 on the first. So it was 9.5 on the second over 10 years. And I think that one was like a $13,000 second mortgage. So it's, the payment was like $100 or something like that.
Oh, okay. So typically it's not that bad.
Yeah. It's because these are small. These are only 3.5% of the purchase price.
Right.
So, if you have a, $300,000 purchase price, you're looking at around a $10,000 second mortgage.
And then plus the extra, well, the 9%, I should say.
Right. So it would be, for example, it was 10,000 second mortgage. It would be whatever the rate is, let's say 9% over 10 years. Figure out your payments. It's going to be about $100 or so.
Not bad at all. Yeah.
So, I mean, getting in the house with no money, and basically you're borrowing the money to get in there. It's going to cost you $100, $150, basically to get in the house with no money. It's a lot of people think it's worth it.
Yeah, I would say
it's a big obstacle. The biggest obstacle today is, saving money for a down payment.
Right. And dealing with closing costs. So yeah, if you could pay for that with a loan and just pay that monthly, that's actually a really good win.
Yep.
Yeah.
And I've seen a lot of these. Sometimes it's harder to get a gift, but I've seen a lot of these where they negotiate with the seller, like, give me $10,000 seller concession, and they use that and they pay their closing costs, so they're not coming in with any money.
I got to keep this in mind.
So I have a question.
So it's like I said, we've been doing this a few months, and it's really snowballed. It's surprising how many people qualify, other than the fact that they don't have the money to get into it.
Right. Do we have another question?
Yeah, I have a question. So in positioning an offer, how would this be a benefit to someone putting an offer in a competitive scenario? Like how could you position this?
So you're talking about a benefit to the seller side, right?
Yes.
Yeah. Well, in that case, what I would do is I would probably get them pre-approved first on this. I would position it that the benefit is the bank has approved them for 100%, so they don't need to worry about verifying the down payment or anything like that. It's already approved, and the lender is providing that down payment, so they're getting in and they're a qualified borrower. It's tough nowadays. A lot of sellers, because of the lack of inventory, they hold all the cards. So a lot of them are accepting cash offers, or they want a big down payment or something like that. So I would structure this. I would definitely try to get this pre-qualified and present to them like this is already qualified, and the money is lined up already.
So we're sort of are we doing a desktop underwriting or fully committed? Is it sort of like a fully committed loan?
Yeah, so right. So we'll run DU on it, and we'll actually, give you an approval with conditions. So you can show them, yep, the borrower's income, assets, credits, all approved. It's just a matter of now, getting the contract.
Okay. Thank you.
I do agree with the question that came asked, because in certain areas or certain towns, this would be such a hard sell, because yes, people are getting full cash offers. People are getting 30% down, 40% down. But I guess it could work, certain places, and may not work certain places. So it's an interesting program, to be honest. But
Yeah, it's not for everybody, because if the seller is getting, 50 offers on it, and they're looking for a cash offer, that is going to be a tough sell. But but a lot of properties, they can, bid whatever they want. They can bid up as long as it appraises. There's no restriction on that. So if their bid is as strong as anybody else taking a mortgage, they have, an equal shot as anybody else.
Well, I have a question. For somebody that is already pre-approved on FHA, can they switch? Can they switch to this program?
Oh yeah, absolutely. Yeah. I mean, it's a different program code with us, but yeah, we can absolutely. I've had loans come in like regular FHA, and then they decide that they don't have the money or don't want to put the money down. So we could switch that over and do this. Absolutely.
So secondary question regarding that, if they can switch, what will be the differences between the regular FHA 3% or 5% down to this one in a sense of qualification?
I'm sorry, the last part of you, in the sense of what?
Qualification, so they can then
Oh,
switch.
qualification. I'm sorry. Okay. So the only difference is like the regular FHA. We go down to 550 credit score. This one, you need a 600 credit score. So provided they're 600 or better, there should be no difference if you have an AUS approval on it. If you need a manual underwrite, it's a little tougher because we need a 660. So, if you have somebody with a low, FICO below 660, you want to make sure they're able to get AUS approved. But outside of that, there's really, no difference in getting them approved.
Thank you.
Cool. Anyone else have any more questions for Paul?
Let me give you one caveat. The only thing that you can't do on this is after they agree on the current contract price and the loan's in, they sign the contract and everything, they can't go back. Let's say the appraisal comes in high. They can't go back and renegotiate a seller concession based on the new purchase price. So I've had that, like on a regular FHA, you can, technically you can raise the purchase price and get a seller concession. This program doesn't allow you to do that. So you got to negotiate everything before the, at the original contract. We can't go back and add a seller concession and increase the price after the appraisal's done. So that doesn't happen too frequently, but I've had people do that a lot, on the regular FHA when it comes in higher.
Okay. Any more questions for Paul? No, everyone's good? Cool. Well, thank you, Paul, for joining us today. I really appreciate it. And thank you for the information. It's been like really good.
Yeah,
Thanks,
thank you
Paul.
so much for having me. And if anybody has any questions, feel free to reach out to me, and I'll be glad to help you any way I can.
Yeah, can you put your contact information in the chat for us?
Absolutely.
So I'm pretty sure we'll have more questions for you coming soon. I know I will.
And we didn't have enough people joined, but I think this is recorded, so we can, you may have other people who may not have been able to join, be able to see this and may have questions. So
Right.
So there's my email address and my phone number. Any questions or anything, feel free to reach out.
You got it. Thank you so much, Paul.
All right. Have a great day, everybody.
Have a great day. Bye.
thanks, Lawrence. Bye.
You're welcome, guys. We got that
Yeah.
all figured out. Let me stop recording. Thanks again, guys, for coming in today. I guess we don't need to really prolong this any longer. This was a good spotlight session. We got his information. I hope you guys got that out of the chat, and I hope this was all good for everyone.
Yes, and everybody will see you at 3 for the coffee hour with Jeff Fetzko. That's going to be a lot of discussion about buyer agency, about the NAR settlement. So make sure that you're there.
Cool, cool. Awesome, guys. So everyone have a great day, and I'll see you all soon. Bye.